Hi there everyone, good afternoon and welcome to this edition of Closing Trades. I'm Avan Dabash, with me Nikunj Dalmia, and a quick check-in on the markets, and it looks like it's status quo. Yes, 19,700 being maintained, but it's an all-in-all range-bound day of trade, and ditto when it comes to the broader universe. So despite the kind of move that we witnessed overnight on Wall Street, for us, it looks like we're in our own zone. You've got the auto index, media, metals, those are taking a back seat, and IT as a basket is clearly taking charge. You've got PSU banks and the Nifty bank index as well that is managing to contribute on the upside. So off from the low point of the trading day, but holding on to the 19,700 mark by the skin of our teeth. Ditto when it comes to the broader universe as well. In fact, just checking in on some individual constituents, and you've got support coming in from the likes of Divi's Labs, Bharti Airtel in the green, HCL Technologies, Tech Mahindra, IndusInd Bank. So Nikunj, clearly IT seems to be leading the way this afternoon.
Aman, it's a market which is steady. It's a market where breadth is looking much better. It's a market where it appeared that banks will be leading the market action on the upside. That has not translated into reality. I'm not so sure if you want to read too much into the strength in the IT sector, because in my book that is a weak sector. But for me, what matters are a couple of factors. One, the list of stocks which are at a 52-week high, I think is quite impressive. More than the bank Nifty, I think Nifty is almost Nifty is the one where the inertia I think is the highest. We don't have any large calendar events, but it's a matter of maybe 2 or 3 trading sessions that all the narrative then will soon start shifting towards the state elections and what will happen there and what will be the outcome. So in terms of a market trend, it's outperformance in small and mid cap stocks, and it's across the board now, from diagnostics to pharma, from FMCG to even for that matter technology names. It's pretty much across the board, very strong market breadth. And the bank Nifty is clearly looking very jammed, largely because of what we've heard from Reserve Bank of India in terms of where they want the unsecured loan book for a lot of these banks to go.
Okay, yes, indeed, that is what is driving the move within the Nifty, within the banking space. But let's connect with our chartists as well and find out their views on the technicals. We've got Kunal Bothra joining in as always, as well as Naresh Mirani. Kunal, why don't we take off from what Nikunj was talking about when it comes to the banks in terms of the trajectory? This morning you had a whole recommendation.
Well, yeah, I will stick to that. In fact, today as we look at the market proceedings for the day, so far, you've seen good recovery coming back into IndusInd Bank. I think if I'm not wrong, it's almost on the in a manner of making a multi-week closing high. If it closes above this 1510 odd mark on the spot level, so I think that could be a strong indication that even within the pain within the larger cap banking names, specifically the likes of ICICI, Kotak, etc. I think there are still some green shoots which are available in terms of fresh breakouts on the private sector banking stocks. So I think that's going to be an encouraging point for the markets. So I will still hold on to the view on the banking index as well as on the Nifty. In fact, my sense is that this dip of 100 to 100 points on the Nifty, which has happened from the previous week high, I think this should be a good level to try and enter into the index trades, and expecting a breakout back again on the index in the next couple of trading sessions.
All right, Naresh, let's get in your thoughts then. What do you make of the IT index, given the kind of move that we're seeing, the large cap stocks across the board leading the way? Do you believe that this traction is here to stay?
So in the IT pack, it continues to be selective names. The larger names have not been doing great. So Infosys, TCS, even a Tech Mahindra and a Wipro continue to be in sideways to downward trend on various timeframes. But at the same time, you have very clear leadership in the mid cap. We've seen a KPIT continue to make all-time highs, persistent make all-time highs. Same way in the large caps, HCL Tech, which has been a favorite, has hit a first one to hit a new all-time high. So out here in IT, one has to be stock specific. So HCL Tech remains the top bet in the larger names. In the mid cap names, one has to be cautious because of the rally in some of these names have been pretty large in the near term. So one should be looking at booking profits rather than looking at a trade on the mid cap IT side. So a little cautious on the mid-cap IT side.
There's one particular stock which is shot up in trade today. In fact, it's locked on a circuit, and that is Pratap Snacks. We got you exclusive details of the block which happened earlier in the day. But Nikunj, you looked at this particular stock for a long time, in the sense that at one point in time, the big PMS guys loved this stock. Yeah. When it got listed, the Indore-based management, and then completely fell off the cliff. This morning we are gathering that some smart guys have picked up that block which is sold by part family, part Sequoia. Any thoughts?
See, Sequoia is a very large investor in it. And if you look at Sequoia, Sequoia is in the process of unwinding a lot of investments in India. So you look at Sequoia, I mean, what are some of the large holdings in India? One of the large holding is actually Pratap Snacks. The other large holding is 5-star, where I think they have a $1 billion plus position. So when a PE fund is globally going through a wind down process, obviously the India portfolio in a sense will get impacted. Now you know that the snack business in India is again a high growth business, and it's a business where everybody wants to acquire the small players, whether it is ITC or Tata Consumer, whether it is Britannia. Everybody wants to own a piece of the snack market in India because that's a market where A, the growth is strong, B, it's a market where the unorganized is losing market share. It's a market where if you've got a brand, you've got a presence, I think it's very unique. Now Pratap Snacks owns a brand called Diamond, and it's one of those brands, chips and other things. I mean chips and actually largely chips, but the brand is very famous. It's a single plaque brand, but unfortunately what happened for them, the minute when they went public, potato prices went all over the place. Food inflation is something they were not able to manage. The company went public at a P multiple of some 70-80 times, and then came the inflationary pressure, and then selling by some of the P investors. That led to an absolute decline in Pratap Snacks. But if one looks at the entire snack space, which is the quick snack space, I guess somebody must have seen the World Cup yesterday. Must have seen all the packets and realized that okay, if this is the state of what is happening in Cricket World Cup, might as well buy and make money. So I think that bright thought must have come after the Cricket World Cup.
Okay, but what about the charts, Kunal? If you look at the longer term charts of Pratap, it was what, some 2,000 rupee, if I'm not wrong, a couple of years back, then went to almost 300, 400, now a quiet rebound.
Yeah, so I think 1500 was the 1450 I think was the high for Pratap Snacks. I think in 2018, March, April 2018. From there, yes, the stock was beaten down. It fell down to I think as much as 450, 470. That was the low I think the stock made in 2020 during the COVID period. And I think from there, it's gone through a rebuilding process. So I think it's a good recovery for Pratap Snacks. The stock has managed to make a fresh breakout. So I think after today's move, and assumingly if there's any kind of follow through up move, say tomorrow, post the opening of the circuit, then I believe that the stock may probably get into a multi-month, multi-quarter breakout for itself. So it's a decent chart, shaping up quite well, even though I don't track it very closely. But I believe that the breakout for the stock seems to be quite strong.
All right, fair enough. That's the view coming in on a buzzer in today's trade, which is Pratap Snacks. In the meantime, then, let's also talk about the stocks that are taking a bit of a backseat. And Naresh, come in on Bajaj Finance as well as Bajaj Finserv.
So continues to be a problem area for the stock. Roughly after that attempt at 8,000, the stock has been testing the lower end. But I doubt it should not see a further breakdown below 6,800 levels. So closer to 6,800 is a support, which is where it made a bottom in August, as well as if we go a little back, a lot of that was the last breakout area also. So expecting some bit of a pause around that area. Not looking at it as a short, but overall in the whole financial names after the RBI announcement, the momentum has weakened. So expecting it to be more sideways before it starts making a move up.
Now what do we have? We've got KPIT, which is doing well. We've got Birla Soft, which is doing very well. Very unusual names from the IT space. While KPIT benefits are large because of the work they do in automation and EV, that's doing exceedingly well. You've got MapMyIndia, again not into IT services, but an IT company which has done exceedingly well. RateGain, it has made a phenomenal comeback. Now these are stocks which are at, can you imagine, KPIT, RateGain, Birla Soft, Coforge. Some of these stocks have had such a linear move that it's absolutely incredible. Today may not be the best day. I mean, they hit a 52-week high and then it's come down. But in terms of the move there, of late the move I think has been nothing short of extraordinary. Naresh, a stock which has plummeted today, and that's after days and days of high flying, is BSE. Has BSE done its bit in the near term?
So the stock looked overbought at multiple points over the last 1 month or so at 1800, 1850. I was expecting somewhat of a pause here, but finally it has come. A correction of 15% from the top would be normal, say. So from 2450, 2400 levels, the stock could again go back towards 2100 and then maybe look at a pause. In the near term, yes, it could have made a top, cannot short it as such. But on dips, one could expect a sideways move, would not be looking to buy at a dip of 15%, but expect sideways move from here. A short-term top could be done. A 15% correction is possible from the top.
Kunal, BSC.
Yeah, so I think again I'll agree over here that the stock was very overbought. It was bound to get into a corrective wave. So I think today what is actually happening is that BSC, I think CDSL as well as MCX, I think all three of these stocks which are more or less linked in terms of the price movement in the last 1 week, 1 month, I think all three of the stocks are going through mild correction. But these stocks have given a huge kind of a breakout, and they've given exaggerated kind of returns in the last 6 months. I think BSE has moved from I think 500 or 800 odd towards I think 2400, 2500, which is the high made for the stock price. So I think after such a kind of a steep rally, a mild bit of corrections can come along the way. But I believe that if these stocks, they come back to their key moving averages, the 50 DMA for example, if that's the retracement which we expect into the stock price, that would be a very good opportunity to buy into these pockets.
Okay, let's take a short break. On that note, come back, we'll discuss more stocks right after this break. So we still have Kunal and Nuresh with us while our Funda guest is just miking up. One stock importantly, pull up SML Isuzu. SML Isuzu is a mid-tier CV maker. Look at that, the way it has shot up 13%. Sharad did a khabar just 15 days back saying that it could be on the block, and they are in touch with some of the big other OEMs like Leyland and even JBM Auto. So that is one stock that shot up. Kunal, can you check the charts of SML? Is it backed by volumes?
Yeah, I think it's backed by very good volumes. In fact, the last week or the week prior to that, there was a strong move of I think 200 to 20 points for SML Isuzu from 1200 to 1400. And I think in that 1 week or 3 days of up move for the stock price, the volumes were at a multi-week, multi-month high for the stock price. So I think that was maybe the first kind of a inkling or a trigger that the stock is heading towards a breakout. Today, yes, the stock has managed to confirm back above that 1400, 1425 mark, and I think it's done exceptionally well. Again, backed by very strong volumes.
All right, in fact, let's get a move on then and keep you up to speed with other news and updates. And billionaire industrialist Gautam Singhania's estranged wife, Nawaz Modi Singhania, has asked for 75% of his net worth, which sums up to $1.4 billion. Let's get in Sharath, who joins in with the latest details. Sharath?
Well, yes, important development coming in when it comes to the settlement which is expected to happen between Gautam Singhania and his estranged wife Nawaz Modi. And earlier this month, it was actually announced on social media as well about their divorce. Now, importantly, the terms have been set by Nawaz Modi, and Nawaz Modi has actually sought for 75% of net worth of Gautam Singhania. That roughly is calculated to roughly $1.4 billion. And this will be there for her as well as her kids. And as ET reports, the settlement would be a part of the couple's separation. Apart from this, both the sides have actually gained their lawyer access as well, and Singhania has largely agreed to share the wealth as per ET reports, and he's suggesting to set up a family trust. Now, another important demand is that Singhania would be the sole managing trustee of this trust, and as per the reports, it's stated that the condition is not acceptable to Nawaz Modi. Overall, if you look at it, the promoters are having almost 49% stake in Raymond as well. And it's a developing story from both the sides, and important settlement is expected to come in as per the lawyers in the coming weeks.
For giving us those latest details, that's as per the Economic Times report this morning with respect to the Singhania settlement. In fact, let's get in a check-in then from you, Nuresh, as to how the charts are trending for Raymond. Walk us through what the past few months have been like and what your view is at 1764. Nuresh, unmute yourself.
Technically, the stock saw a good breakout move in the near term from 1600 levels. The stock went all the way to 2200, where it made a classical top with a big gap up. Since then, it has been drifting lower, and now 1600 becomes a support point. In the near term, the bounce back was closer to 1900, 1920, where it got resisted for 5-7 sessions. So for now, I would expect it to be in a range of 1600, 1650 on the downside, 1900 on the upside. No real trend now, expecting it to remain sideways. The longer term trend is still positive. In the short term, could expect some more consolidation in this 300-pointer range.
In fact, we were talking about how transformer companies are buzzing last few days. Look up Skipper. The stock has shot up 9% in trade today with good volumes. Nuresh, can you check the charts of Skipper?
So we've seen the whole segment do really well from the larger names, starting off with Voltam, Bharat Bijli. Even microcap names have done well in the sector. Now, Skipper also, after being a stock which went through almost a 50% correction from 2018 tops, it went through a 50-70% correction, has made a slow and steady recovery. In the near term, the stock was in a sideways range between 200 to 250. A fresh breakout has taken place today after a good enough 3 months of consolidation. Ideally, it should target a level of 300, which was the high back in 2018, and sustaining that could be, say, much more towards 330, 350. The trend is positive, a buy on dips.
With Ashutosh Bhargav. He's fund manager and head equity research at Nippon India Mutual Fund, now joins us on the show. Ashutosh, good to have you on board. Let's begin by just getting in your thoughts as to how you're reading into the latest when it comes to the overall markets. Do you think that the fact that we seem to be in our own trajectory, not perhaps taking cognizance of some of the overseas cues, the macros back home as well seem to be fairly steady. What's your outlook in terms of what the markets hold in store? How are you looking at overall corporate profit growth as well when it comes to earnings?
Hi, good afternoon. So last couple of months, there has been high uncertainty related to the war which is going on in the Middle East, and also related to Fed tightening, etc. And last few weeks, I would say those concerns has abated, and the entire focus have come back to the cyclical recovery. And the good news here is that globally the worries related to hard landing, the data which is coming, the earnings which are coming, they are turning out to be better than most people's expectations. So this is how we are at a global level. We are going into 2024, which to my mind is going to be a relatively more boring, slow recovery kind of year for the global economy. As far as domestic earnings are concerned, we have just see the conclusion of the second quarter earnings, and here also on a relative basis, earnings have been better than expectation. We have seen overall upgrades in Nifty EPS. Yes, there has been differences in terms of where the earnings is coming from, and most of the earnings surprise are coming from domestic cyclical sectors. But on an overall basis, this is an environment which looks like more stable as far as macro earning related news flow is concerned, and this is how we are entering the next calendar year.
The big sector which has not participated is banks. And for a sector which has not participated, now there seems to be a double whammy. NIMs are coming under pressure and growth will come under pressure after Reserve Bank of India's diktat on unsecured loans. So do you think banks could be the biggest bugbear? And if banks go easy on unsecured loans, it will have a spiral down effect on just about everything, from credit card loans to what will happen to a small ticket mobile item and what essentially will happen to the spending.
Nikuj, obviously RBI is a bit concerned. Only with time will tell whether these concerns are overdone or there is some truth behind, whatever the actions they have taken in terms of risk weightages. But to our mind, when we look at banks in general, what has happened the last 2-3 quarters, there has been better than expected earning performance. This is a sector where credit growth has surprised positively. NIM decline has been much lower than what people were worried 6 months ago. And asset quality concern, barring this small unsecured piece, which is close to 4-5% of the overall banking sector book, there is no asset quality concerns as such. So if you look at next 2 years as well, we are talking about only 12 to 13% kind of earnings growth. And I think despite this action by the RBI, which can lead to 2 to 3 percentage point earnings cut overall, I don't think there's going to be disappointment in earning as far as banks is concerned. This is a sector where valuations are also very reasonable versus their own history, and particularly versus the rest of the market. So I think there has been a good consolidation. There has been some bad news, but I think price-wise, banks are not looking unattractive to us.
Is that the reason why you have actually, as a house, trimmed some of the largish NBFCs from your portfolios?
Ajay bhai, NBFCs in general, we think, the valuations were a bit stretched in general. The NBFCs which we are liking is less into the consumer segment in general, but more into infrastructure, power sector, lending related NBFCs, or those NBFCs are into auto lending. But in general, consumer specific lenders in the NBFC space, we are in general underweight. We think, we are in that point of the cycle where liability side would matter a lot more. And therefore, we favor banks over NBFC in general, beside the pockets like, as I said, infrastructure lending, bit of microfinance, and some bit of auto lending.
Okay, so where are you picking your spots now? Where are you looking at some compounding ideas where there could be scope of P expansion and earnings growth?
One theme which we have increased our allocation in general is the power sector theme. So right from your equipment companies to financing companies to utility company, which are generation as well as transmission company, I think we are in a multi-quarter to multi-year upcycle there. And there, if you look at, the visibility and earnings in general is improving. And valuations also remain reasonable. Therefore, there is still some scope of re-rating, particularly given the fact that a lot of institutions were underweight into these names going into this cycle. So we think this sector has outperformed, but there is still more scope for earnings growth estimate to be met and perhaps better than expectation, and some more scope for multiple re-rating across the value chain in the power sector.
You have a very fair argument, Ashu, but within the power space, will you go for power financiers? There is enough fancy for big power financiers. In fact, one of the IPOs also in the same space getting good interest. Transmission companies, wires and cables, or even some of the legacy power companies which are at multi-decade, 1.5 decade high as NTPC. So where do you find better risk reward out of all of these?
Ajay bhai, what we have seen historically, market rewards earnings and positive earning surprise and upgrades. The whole value chain which we have talked about, we have very high confidence that there won't be much disappointment in any of the value chain, be it financiers, utility companies, equipment companies, and so on. So we think, one has to look at holistically, make a portfolio where you're participating in all sort of names rather than, picking one over the other, because within the bigger theme, there can be rotation that would keep happening. But if you're thinking from 2-3 year perspective, I think the entire value chain should benefit.
Look at PFC, REC, some of these stocks a couple of years ago were available at dividend yields of 5 to 6%, and nobody liked them. That is what markets are. Markets, just imagine a pendulum, folks. There is one side greed and there is one side fear. When the fear part is there, that's the time nobody wants to buy. You want to sell. And when the greed part comes in, everybody wants to buy. And I think PFC, REC, the dividend yield, I think it will be still 3.5 to 4%. It's not going to be 5-6%, but the dividend yield in some of these stocks 2-3 years ago at the peak of the COVID was just mouth-watering, that you could actually buy an equity stock and you were getting a bond, almost like a coupon with a yield of 5 to 6%. That's what markets are. Railway stocks, when they went public, they actually went below their offer price, below the IPO price. But today, I think it's the complete, reverse, so to speak. Where do you think there is a serious mispricing in the PSU space? Power we've discussed, but what about railways, defense? Is there any mispricing there?
Obviously, there could be some double counting as far as revenues are concerned, because at the end of the day, lot of these sectors depend on government spending, and if you do the bottom up, it becomes a bit difficult to justify that there would be so much of spending over the next 4 5 years in all these pockets, including renewable, railways, uh, and defense as a sector. So one has to be selective from here. We are at that point of the cycle where a lot of these themes have been discovered over the last 12, 15 months. And from here on, one needs to be selective, have to focus more on the bottom up work, because not all of these stocks in the overall, each of these themes would really deliver in terms of revenues as well as profitability. So here on, we are more confident, honestly, over power and defense as two of the infrastructure themes versus, say, other themes like railways. So this is our house view, and we would advise investors to be incrementally more discerning as far as some of these comeback themes are concerned.
The other space I would like your opinion on is the entire EMS space. One is the actual manufacturers, but then the argument is that they are no longer cheap, though there is a lot of new PLI also being opened up by the government. Then there is the software part of EMS, engineering R&D type. There's a big IPO also opened around it. Would you play R&D, engineering, manufacturing from the software route or by these new age EMS guys?
Ajay bhai, this is a new theme, but the reality is that we are already seeing a big shift in terms of work which is coming as far as these services exports are concerned. Some part belongs to this space which you're talking about. A lot of these EMS companies would also perhaps keep delivering very high growth. They are at the very initial part of the long-term journey. Again, the same point here also, that it will be a bit of some bit of extra work is required in terms of identifying which are those companies which have a serious long runway as far as earnings are concerned. Because at this point of time, you are seeing each and every company in this space is getting re-rated. So we need to see, because at the end of the 4 5 year period, the number of winners would be very selective, 2 3 4 winners in these categories. So one needs to definitely participate in this theme because the runway is very, very long. But again, one has to be choosy in terms of the right management and within the EMS space, right segment where you think the revenue runway could be strong over the next 4 5 years.
Ashutosh, thanks much for joining in and sharing with us your sectoral preferences. Let's find out then what are the BTST ideas and closing trades from our chartist. And Kunal, what is it that you're flagging off on the charts?
So as a closing trade, I would look at City Union Bank as a buy. I think the stock, I've been bullish on the stock earlier. I think at 150 levels, the stock is confirming a golden crossover breakout where the 50 DMA has crossed over about the 200 moving average. So looks attractive.
All right, that's Kunal's closing trade. Nuresh, what about you?
So that would be a buy on Bharti Airtel. The stock has hit a new 52-week high and an all-time high today. It's been a slow and steady mover over the last 2 months. Finally, after consolidating around that 950, 960 mark for the last 2 months, it's a fresh breakout, expecting this to go towards 1,000, 1,050 in the short term.
All right, time for a very quick break then right here on the show, and let's hear it out from Ajay Srivastav. He says that investors in large caps have been left disappointed. Hear out his take and what he had to say about finding value in this market.
If you look at the vast majority of people who have got invested in the large cap funds, who got invested in the banking fund, I think for them it's not been a good year at all at this point of time. So yes, there are big pockets of market which have done reasonably well, or quite well, or exceedingly well in that order in the mid cap, small cap. But if you look at the vast universe of money invested in the large caps, that's been a very, very disappointing year for them. And we keep saying it's going to repeat itself next year. And that's the sad irony that a large portion of funds of retail public are not making even a decent return. So yes, the general market has done very well for most investors. Most PMS portfolios have done extremely well. Individuals may have done extremely well, but I think the general public, which are invested in large caps, I think had left disappointing. And you've seen what's happened to the banking index in any case. So I think, you need to bifurcate the market saying exceedingly well, very good, and very, very disappointing. Large caps have been part of the very disappointing bucket. India is not a value market. Everything is expensive at the end of the day. So you're really buying momentum. You're buying PE expansion at this point of time. You're really very, very few, far and far between. You will find a value stock. You may consider the PSU bucket to be the value stock because those are the only ones in single-digit PEs and decent cash flow, etc. But really speaking, across the board, there is no value in this market. This market is about momentum investing. This market is about new stories coming out. This market is about government spending themes.
All right, in conversation with our technical experts, Kunal and Naresh, and we're counting down to the market close. 12 minutes, about 18 minutes left. It's turning out to be just a no-go kind of a market. It's a no-go market largely because the Nifty has done nothing, but the breadth of the market looks quite unique in terms of the strength. Naresh, what is the standout feature according to you, at least when it comes to today's price action?
So overall, the standout feature continues to be the auto sector as such, which has continued to hold on, did not correct on the downside, and it has continued to make new highs. So the broader market, as well as sectors which have continued to lead, have continued to surprise on the upside. So something like a PFC, REC has also continued. So wherever there has been a strong trend, it has continued. And the places where there has been weakness or sideways, the pressure continues. So the best way to trade right now is to go with wherever there is relative outperformance. And the breadth is still very, very positive relative to the Nifty 50.
Guys, let's also get you some juicy gossip from dealing room. Sharad is here to talk about one mid-cap stock which is being discussed in the dealing room. Sharad, tell us, what stock is it today?
Well, yes, in focus, we are having Aster DM Healthcare, and the street buzz is that the GCC restructuring is expected to be completed soon. In this restructuring, the company will be selling its Gulf business, and also importantly, strong interest is also being shown from marquee investors in the Middle East. Apart from this, also the margins in India business, that is expected to go up, especially after its brownfield expansion, and also the timely stake sale of this GCC restructuring would actually aid margins going ahead and re-rate the stock, and also lower the gap with the peers. Now, we did SOTP evaluation, and over here we got to know that for the Indian business, the FY25 EV/EBITDA multiple stands at roughly 18 times, while the same number stands at almost 8 times for the Gulf business.
All right, thanks very much for giving us a little bit of a snapshot as to what the dealing room chatter is. Meanwhile, just let's check in on the broader universe and find out which are some of the stocks as well that are flying around in trade as the markets continue to remain awfully listless. And on the downside, take a look at an Indo count, 6% being shaved off. Solar industries as well as under a bit of pressure. You've also got something like a Varroc Engineering that we flagged off, and something like an India Bulls Real Estate along with Rajesh Exports. Those are some of the drags in today's trade. Kunal, let's get in a word then. Balkrishna Industries, Indocount, BSE, how are the charts looking?
So Balkrishna Industries is a bit of a surprise because the stock is typically a very low beta stock. I think there was a phase where many of the tire stocks like Apollo Tires, DK Tires, etc., they were performing exceptionally well. Balkrishna Industries was lagging behind to I think 1800, 1900 mark. This was I think end of 2022. But from there, the stock has started to get into that covering up of the underperformance. So now we are at a point where many of the other tire stocks, like Apollo Tires, etc., these stocks were going through their own phases of correction, but Balkrishna Industries was making a new high. Now, today's move in terms of the downside, this 5% downtick move for Balkrishna Industries, dents the prospect for the stock over the near term. We could now be looking at a possible, further correction to the stock price and retest towards the previous support. So now, for example, the 100-day moving average for Balkrishna Industries is at 2400, 2450 mark, and the 200-day moving average is placed lower than that. So I would actually expect the stock to retest both of these levels. That could be a good contra buying zone for Balkrishna Industries.
Naresh, can you check the charts for Man Infra? Man Infra is up by almost 4.5% today at 151 odd, and this is exactly the level it got sold off from about 15-20 days back after the results. Does it appear crossing that level 151, 152? Because if it does, then it will get into new territory. How does the chart look, Nuresh?
So technically, the stock has been in a uptrend right from April, wherein it was at 70 odd levels, made a move all the way to 160.65, which is where it started a correction. 155 to 160 has been a problem zone for the last 3 months. So if it can sustain above 155, that would be a fresh breakout. Whether it does it now or a bit later, that is the expectation given the strong trend in the whole real estate and infra basket. So if you look at it, smaller names like Kolte Patil is up today. You're seeing a lot more smaller names doing well. So Man Infra would actually be a buy on radar above 155, or one could preempt a buy at current levels with a stop loss below 140. The trend is positive, could break out now or maybe over the next few weeks.
That's Man Infra for you. Again, a very interesting stock. Care Ratings, that particular stock is a very big beneficiary of the fundraise, the capex cycle here in India, because companies, before funding it by debt, go to rating agencies and get their papers or books vetted and perhaps upgraded. So that's one stock, topped out at 1000 and then went to a correction to about 800. Kunal, that dip, it went to around 850 odd, seems to have been bought. Can it take out the 1000 mark again, taken positionally?
Yeah, it looks very strong. In fact, what had happened is, Ajay, when when the stock had actually hit that 1000 mark, it was a 15%, 20% kind of a weekly up move for the stock price. The volumes were at a multi-month high, in fact, a multi-year high, if I'm not wrong, for the stock on the NSE at least. And then what followed was 4 or 5 weeks of straight correction into the stock price. Now, in this 4 or 5 weeks of correction, it's come back to the starting point of that strong weekly up move for Care Ratings. So, this completes a major process of mean reversion, that when stocks move up higher in terms of a breakout on the back of some extremely strong volumes, and then there is no follow-up price up move, and these stocks, they come back to their major support points or the starting point, we expect that the mean reversion gets completed. So I think this could be a good entry point for someone who missed out earlier on Care Ratings. Yeah, and I think in many of the cases, these stocks, they at least retest their previous swing highs. And in many cases, if the market structure also improves or gets better, then we expect a further up move for the stocks beyond that. So, but 950,000 levels could be a decent target for the stock over the near term.
Okay, there you have it. That's the view coming in on some of those buzzers. In the meantime, then, Naresh, wanted to get in a check from you as to where is it within the entire insurance space that you believe that there is merit?
So in terms of insurance, the leader overall has been SBI Life. For the fact that the stock did not correct much and has been one of the stocks which makes the fastest recovery. Made a new all-time high yesterday, crossed that 1350 mark, which was a problem for the last almost 4 or 5 months. Also, the stock had topped out around 1300 for the whole of 2022. So that's a leadership stock, which is very clear. The second one, which gave a clean breakout yesterday, was again ICICI Lombard, which has gone sideways for the last year and a half, gave a breakout above 1400. So these are the two names which look as a buy on dips, and a contra bet would be LIC, Life Insurance Corporation of India, because that's corrected quite a bit over the last 2-3 months from almost 690 back to 600 odd levels. And 600 was the level last seen in May, June. So that was the last time it saw big volumes. So that would be a basket wherein you look at ICICI Lombard, SBI Life and LIC.
Okay, fair enough. In the meantime, just also wanted to check in on some of the smart movers over the last 1 month, and BSE is a stock that has gained quite a bit of traction. We also flagged it off today, but it's been a near 43% notch up that we've witnessed in the last 1 month or so. There's been something like a Tata Investment Corporation as well. That stock has seen a steady move on the upside. KPIT Tech, we flagged off that mid-cap IT counter, 36% close to. That's the kind of move that you've witnessed in the last 1 month. And Power Finance Corp as well has been a smart mover, along with something like a CDSL. Mind you, Trent as well has notched up quite smartly, close to 30% is what that counter has gained. Kunal, any of the stocks that I've flagged off you believe are good to go for more?
So I think from the names which you mentioned, for example, on the corrective side, BSE is something which I believe could probably get into a corrective mode further and come back to the respective 50-day moving average. Trend is something which I think is now entering into the overbought territory on the chart. So even if the stock is perched at 2,600 odd levels, I believe that so, and specifically on the monthly and the quarterly RSIs, which are at an exaggerated levels for the stock price, I would actually wait out for a corrective wave over here. But I think many of the, so for example, in that aspect, Aditya Birla Fashion, I think is now trading at 215 or 220 odd mark in terms of a relative comparison. This is a stock which is actually looking attractive at current levels.
Nourish, has Religare corrected for the time being? It went to almost 210 and has in 2 days back to 230.
So it's been a one-way drift after making that top around 270. And the stock had moved up really sharp over the last 2 months. So I would expect the retest is most probably done at 210. But I would expect overall to be a slow and steady move towards 250, 270 levels. So it's a buy on dips closer to 220, 25 with a stop loss below 215. So technically short-term bottom is done, but may not be a very swift move towards that 240, 250, 270 mark.
Right. That's Religare. Also from the power space, or in fact come back to pharma. Piramal Enterprises actually come back. Kunal, can you check that chart for us? Piramal Healthcare, I would say. After making a bottom of 65, the stock is quietly moving higher.
Yeah, I think it's been a turnaround chart, Ajay, and I do track the stock very closely. I think there was a point where the stock struggled to break past about the 3-digit level for quite some time, but I think the last 1 month or so, there has been a renewed vigor in terms of momentum. So, the stock 1 month back was almost at 88 or 90 levels. It had broken below the 100-day moving average, but then all of a sudden you saw a sharp reversal on the upside. And the moment the stock had broken past back again about the 100 DMA, we saw more than I think a 15% up move into the stock price. 120.22 was the high for Piramal Pharma. I do track the stock very closely. It looks very attractive. In fact, this last 1 month of up move has actually changed the way the momentum has shaped up for the stock price. And I've always believed that whenever stocks, they change their beta nature, that's a sign of a new trend shaping up into the stock price, something which the stocks may not have been accustomed to or not even seen in the previous history. So I think something similar is happening for Piramal Pharma. Looks very attractive at current juncture.
All right, fair enough. Meantime, let's also listen in to Vishal Kampani of JM Financial. He shared his views on the two-wheeler space. He believes that legacy players are doing well within the EV sector. Listen in.
There's a statement called the empire strikes back.
Yes.
Right? So you're seeing that play out in the two-wheeler space, where you're going to have few sort of startup and few new age sort of companies who are going to try and build a two-wheeler EV space. But I think just the value proposition from a servicing standpoint, understanding of India, broad-based, many states, the entire distribution chain. I think the larger sort of two-wheeler companies will be able to build very strong and good products, and they have superior distribution and customer service capabilities. So I think it's not very clear that the startups will be able to beat the incumbents. People do see some value in IT. I'm not very convinced about it. I think we have to wait and watch. A lot of the changes happening in thanks to AI, changes that will happen thanks to advancement in quantum computing, etc., will have, I think, a profound impact.
But you were making a point on IT that the plain vanilla business models versus new age business models. People are taking a differentiated view on IT.
No, they are. All investors are. Absolutely. So if you look at engineering services, tech services, they will command a premium over IT services. Clearly. But I'm saying something different. I'm just saying that, see, what may become cheap today, I think with the changes in technology, may get cheaper tomorrow. It's not necessarily
may get cheaper.
That it's attractive today, because there could be fundamental changes happening in technology and the way the world is looking at things. Right? Look at, for example, legal services as a sector. Or back-end healthcare infrastructure services as a sector, right? There are some profound technology changes happening, which will completely change the way jobs are created in these sectors. So I think it's very easy to say something is cheap and let me buy it today. It may remain cheap for a very, very long time.
All right, meantime, the IPO rush is very much on D Street. Market preparing for 3 IPOs this week: Tata Tech, Fed Bank Financial, and Ardea Energy Investment. We interacted with the management of some of these companies. Let's listen into what they had to say about their growth plans.
Are investing very heavily to improve our positioning in aerospace, transport, construction, and heavy machinery. I truly believe that India will be the innovation hub, the platform from which the majority of product development work will be driven in the future. We believe that we are in a fantastic position to be able to fulfill that potential for Tata Technologies, for the Tata Group, and to make a meaningful contribution to what will happen to the industry over here.
We are present in 575 branches across 16 states and union territories in India. Now, every year we will continue to open branches, and the numbers of which and the specific locations we will firm up at the time we make our operating plan. But suffice to say that our branch expansion will support our aspirations and our ambitions to grow and serve the self-employed community in India.
We have a rough projection or estimate of renewable investment in the country till 2030 around 30 lakh crores. And if you go by a rough estimate of debt equity 75 to 25, then around 24 lakhs crores will be required for additional capacity. And out of that 24 lakh crore, typically 50% is expected to be supported by the NBFCs. When I talk about NBFC, the major player would be IREDA and other two major arm of Power Ministry, that is REC and PFC.
All right, time to get into those BTST calls as well from our chartists. And Kunal, your top bet?
So I'll go with Indus Tower as a first pick. The stock is completing a bullish pennant formation on the hourly charts, and it's almost like a 10-point or 12-point breakout expected for the stock. So keeping a modest target of 198, stop loss could be kept at 187. And HDFC Life, something which I had flagged off in the morning, that's also doing pretty okay in this kind of a listless market. So would retrade a buy in HDFC Life for a target of 700, stop loss at 625.
All right, Kunal, Naresh rather, let's get in your BTST trading call.
So first would be a buy on Bharti Airtel, a fresh new all-time high here, stop loss at 956, target price of 975. Second is a buy on Container Corporation, which has given a breakout and holding around that 750 mark, could catch momentum anytime. Stop loss at 745, target price of 765.
Okay, there you have it. Just about a couple of minutes to go, and we'll be wrapping it up for the equity markets. There have been some interesting newsmakers as well that we've witnessed in trade today. Indian Hotels, for instance, on the back of the brokerage note coming in. You also had Balkrishna Industries reacting to the brokerage note. Let's get in a chart check going then on these two candidates. And Kunal, what are the charts reading?
So Indian Hotels is something which actually looks very attractive. In fact, that's a stock which is confirming a V-shape recovery. So the last month, end of September, the stock had fallen down from 425, 430 levels to I think 375 in a matter of just a couple of weeks at the end of the previous month. And from those 375 levels, the stock has recovered also quite smartly. So I think it's a very good recovery for Indian Hotels, almost a V-shaped recovery. Should be indicative of the stock breaking past above the previous resistance at least, which means 430, 435 could be a very near-term target for the stock. And Balkrishna Industries, I flagged off earlier that the stock may actually get into a further leg of correction. So wouldn't be surprised that the stock corrects by at least another 50 to 100 points over the very near term.
All right, time to wrap it up then. And the markets have, although come off from the low point of the trading day, a smidge below the 19,700 mark. That hasn't quite been conquered. It's a flat day of trade at best, with the Sensex down about 150 points. The broader market's doing precious little. Check in on that market breadth and pretty much even Steven, so no decisive direction. While autos, metals and media haven't really contributed on the upside, IT has made up in fact, and you've also got the pharma as well as PSU banks to a certain extent that have gained a little bit. So taking you through the big drags in trade today, Adani Enterprises at the top of the heap. Bajaj Finance loses out, ditto with Bajaj Finserv. SBI Life, M&M, Adani Ports, Asian Paints. Heavyweights from FMCG, HUL and ITC take a back seat. L&T, Reliance Industries and Sun Pharma all in the red. On the flip side, Divi's Labs, Bharti Airtel gains traction. And then, of course, the tech majors. So Wipro, HCL Technologies, Tech Mahindra, TCS all gain traction in today's trade. Moving right on, then let's take you through some of the newsmakers. You had an Indian Hotels, a positive brokerage note, and that stock wraps up in the green. Balkrishna Industries, not quite so. You've got Pratap Snacks, sources indicating that the Metas have offloaded a 5% stake in the counter. Talbros Auto has received a multi-year order worth about 580 crore rupees. That stock in news, 20%. You've got the likes of a NetWeb, Dixon. They're among the companies that have been approved for the PLI 2.0. And then, of course, it's going to be critical with all those IPOs that are lined up. But within the broader universe, here are some of the other stocks that have managed to make a mark for themselves on the upside despite the flat move. Tata Investment Corp, Moil, Sequence Scientific, ITI, GE Power, NCC and Cyient. While on the flip side, you've got Rajesh Exports, BSE and Yes Bank losing in trade. Well, that's about all the time we have on this edition of Closing Trades. Thanks for watching.